In today's video, I'm going to be reviewing a trade that I took on Tuesday. The trade was taken on USD JPY. Now, I did record my trading session for Thursday, however, nothing actually happened during the session. So I decided to go back and review this trade because there is an important lesson here that I need to learn. This is what the pair was looking like before the London session. And reading from my PIP report, I noted that buyers tried to break out above yesterday's high, but sellers are still strong above this level. If there is a confirmed breakout set up to go long, then I need to take into consideration possible resistance at 109.93 level. And I need to set my target below or at this level for the trade logic to make sense. So on the surface, there is nothing tricky about trading this setup at all. Well, at least until what actually happened. So this is what the breakout looked like. There is a very strong move from buyers, and the problem that I had with this trade is the fact that this could be a very fast break. So fast that if I'm not in the trade, it could be over very quickly. So at the time, I decided to use my 25-75 entry method. I rarely use this strategy, and I only pull it out for those moves that I deem to be very fast moving. The 25-75 method involves entering with a 25% size of what I normally trade. So the strategy is that I would go into the trade with a quarter of my normal position size, and then I would save the remainder 75% for a pullback where I would add in to make it a complete trade. What you're looking at right now is showing where my 25% position is. There is no set entry. It usually is based on where price is at the time. And that's why I am only using it for very fast moving trades. In this particular case, it was difficult for me to find a logical place to put my stop loss. Normally, I would put my stop loss at the previous swing low. However, because of that possible resistance at 109.93, putting the stop loss at the previous swing low would mean that my target would be above that, which breaks the logic of the trade. So using a 25% position size, I decided to improvise a little bit and put stop loss where it is right now. You can see that the target is below that 109.93 level. So at least from the logic side of things, my trade passes that checklist. Well, this trade ended up hitting target easily, and it actually went beyond that. But in my eyes, this is a failed trade because when price pulled back to the breakout level like I had anticipated, I was not able to add in the remainder 3/4 of the position. Now I'm looking back, I'm going to go through it on a candle by candle basis to see where that tipping point could have been and where I could have put in the remainder 75% of the position. So this was where my entry was, and then price pulled back to the breakout level. This is a typical indecision candle followed by another. At the time when I say this was unfolding, I was anticipating another move up, and I was planning to put in the remainder of the position. However, the problem I had at the time was the placement of the stop loss. And this comes back to the fact that I have not had much practice with it. And without practice, there is not much experience that I can draw upon. So when these two indecision candles is happening, it was telling me that, okay, this breakout level could now be acting as support, and there is price action evidence to suggest that it is. If I'm going to be entering on, say, a break of this candle here, where would my stop loss be in order for it to make sense? Typically, if I'm trading a continuation move on a higher time frame, it would go below the low of the indecision candle. However, the dilemma that I had at the time is that my quarter position that I've already entered in, stop loss is lower than that. So I had to make a decision at the time of trading. Do I keep the stop loss the same for the remainder 75% of the position, or do I use the actual stop loss as price action is showing me? Now, you might think that that's an easy decision to make, and looking back retrospectively, it is an easy decision to make. But at the time when I was trading it, because I wasn't prepared to face that scenario, I didn't know what was the best course of action. And because I didn't know what was the best course of action, the best way for me to approach that is actually to do nothing. So I decided this is something I need to go back to my trading plan and revise it, add in more details so I know what I need to do next time. But for now, I'm just gonna leave it as it is and use this as a learning opportunity. Looking back now and speaking in hindsight, the correct course of action was for me to use the same stop loss position. The entry on the remainder 75% of the position might be different than the first 25%, but the stop losses needs to be at the same place. Next time, if I'm adding in a first 25% of a position, I also need to keep in mind, okay, if there is an opportunity to put in the rest of the position to make a full size, where would that stop loss be? And I need to think about that when I'm putting the first position in. I'm hoping that this is going to serve as a case study example, and I need to go back to my drawing board and put in more details about the way that I enter into this fast moving trade. Had I not been in the trade very early on, I don't think I actually have the chance to enter the trade, because the trade was unfolding slightly differently to how I normally trade breakouts on the intraday level. What I did right was the fact that I recognized that this could be a fast moving trade, and I was correct in putting in a smaller position. What I didn't do right was planning ahead, making sure that when there is a pullback and there is evidence to suggest that I can add more size, I need to be able to identify where the stop loss should have been and to actually put in that size. So instead of getting a full win, I ended up with a quarter win, and that is the result of lack of experience and lack of planning on my part. That's it for me from today's video. Thank you for watching, and I'll see you in my next one.